Yes, that's a very important question. And will I buy gold at these levels? Yes, I will buy gold at these levels. I don't expect gold and silver to have a similar performance, perhaps in 2026. However, the factors that drove the rise of gold and silver this year are, in fact, still present and strong, whether they are technical or fundamental factors at this stage. Therefore, I believe this rise essentially indicates a loss of confidence in the global monetary system, one way or another. Today, we are still in a phase where the US Federal Reserve is stimulating the markets and psychologically preparing them for interest rate cuts in the upcoming period. There are also banks that may be on the same page and on the same path. We also have the issue with the US dollar and the issue of monetary policy in the United States, whether it's monetary policy or what's happening in the White House. At the same time, we have silver, which has excellent demand from various industries, including electric vehicles and renewable energy. And there's also
Since you mentioned silver, there is a link between the Standard & Poor's 500 index and silver. What are your expectations for this link or relationship between the Standard & Poor's, its increases, and the resulting impact on silver?
there is a correlation. That's correct. But I believe that silver will outperform the S&P index in the upcoming phase. The cycle today in precious metals and real metals is still holding on to this bullish or buying position at the current time. I don't believe that American stocks will have the same strength in the upcoming phase, even if interest rates are cut. I mean, today, the real criterion isn't just the interest rate cut, there are fundamental criteria. This is exactly what makes silver stand out as a real metal, as a tangible asset in the upcoming phase. If we take into account global demand and even this correlation with the S&P index. American stocks, yes, have achieved excellent indicators and levels, exceeding 20% gains in 2025. However, this is not a general rule because it's fundamentally linked to the technology momentum, which perhaps now faces a big question mark in the upcoming phase. And one might think that technology, of course, will be in a good place in the upcoming stages, but we may not see the same momentum in the sector in the coming years, or at least in the upcoming phase, until interest rates are cut. So the factors that play today support precious metals. And if we look, Collad, as we saw in your report, as you mentioned, the rise wasn't just a record for silver or gold. Platinum, for example, also reached levels we haven't seen in more than 15 years. So this points to one fact that today, real metals and tangible assets in this cycle are still strong. And I believe that this correlation may continue in the upcoming phase, but silver will outperform in the upcoming phase. We might not get 100% in 2025 or 2026. I don't think so, because that would put silver at.
You're a proponent of the theory that the Dow Jones Index always provides opportunities, and that in global crises, in the Great Depression or Chernobyl explosion, or even, during the Cold War, there are always opportunities in the Dow Jones Index. From your point of view, are the current levels in the Dow Jones Index something you'd advise? It's not advice, but is it suitable for buying, or do you expect sharp declines in the index during 2026?
I don't believe in sharp declines, except in one case, which would most likely be related to what's called a black swan. In 2026, it's not a mistake in monetary policy, nor is it the US falling into recession. It's a mistake that may not be calculated, what's called a black swan, in the next days. Other than that, yes, if you are a long term investor and are not looking for temporary profits or for speculation, yes, the Dow Jones Index has actually performed excellently since its inception and since trading began on it more than 100 years ago. As we mentioned, every opportunity for a decline, every specific crisis gives us a chance to enter and buy into this giant index in the coming phase. I lean towards the Dow Jones, perhaps more than the Nasdaq, for example, and even more than the S&P 500 because you might have more diversity. Because the Dow Jones was historically the index of industrial companies in America. The historically heavyweight indices and the blue chips that were present in the United States of America. But are these valuations perhaps high? Yes, there are high valuations. And, the return on the stock may not be logical if we consider the record highs in technology specifically. And this pushes me to perhaps lean towards the Dow Jones more than the Nasdaq, perhaps, in the coming phase.
So there is a fear of Nasdaq of technology stocks. From your point of view?
That's right. In my opinion, yes, there is a real fear because it's mainly linked to two things. First, the valuations, which have reached record levels. Second, it's linked to cheap money. Because lowering the interest rate is very important for the NASDAQ. Technology uses low interest rates for expansion, and its impact is greater on the technology sector than on industrial and other sectors. Yes, the NASDAQ is at record levels. Yes, technology is a historical and real part of the changes happening globally, but it is the most dangerous in the coming phase.
How will you, Mason, diversify your investment portfolio for 2026?
Uh, I will keep gold and silver. I still believe that the cycle's not over yet. Also, precious metals, tangible assets, and Bitcoin will be an integral part. I believe that the 5% decline in Bitcoin right now will lead to good rises in the second and third quarters, based on Bitcoin's historical performance. There will also be exposure to stock indices, but I believe I prefer the Dow Jones over the rest of the American indices. The Japanese indices are good at the moment, but also, as long as the yen is weak, they perform well in the coming phase. So I think this will be good. Also, in Europe, there are perhaps good stocks. European indices haven't reached the same scary, large, and dangerous valuations as in America. Therefore, I believe that European indices in Germany could show good signs of the political situation is resolved. The political military situation between Ukraine and Russia, if it's resolved in 2026, there will be a strong bet on European indices.
Regarding currencies, do you see more weakness for the yen? Especially since, Mason, as you know, the yen used to be a safe haven. Today, what are your expectations for the yen's trajectory?
I believe that the yen may rise in the coming period. I believe that today, from 155 and 156 in the dollar yen, there's an excellent opportunity to sell the dollar against the yen, even based on technical levels. And I'm betting that we might see the yen at 150 and 147 in the coming period in 2026, even if we take bond yields into account. Also, one of the assets I'm considering is American bonds. To lead these yields in one way or another, I believe offer a very excellent opportunity. The short and long term yields, not the long ones, 10 years, 5 years, 7 years. There's a very excellent opportunity from these yields that are currently available. For currencies, I believe the yen presents an excellent opportunity. I think the Swiss franc is still good, but beware of intervention from the central bank in Switzerland, because the central bank in Switzerland is greatly harmed by the yen remaining high, especially since central banks are implementing interest rate reduction policies. This is something I'd warn against in 2026 if the central bank in Switzerland, the SNB, intervenes.